Hi, my name is Phil. I'm the co-founder of Quantum Code, which is a hedge fund software company now community. I'm 24 years old. I'm originally from Austria. I currently live in Bali. I traveled the world for the past 2 years, and now I settled down here for a few months to focus on growing our business further. When I was young, I played hockey in Austria. I wanted to become a pro when I moved to the US to play, but there was a pretty low chance for me to make it big, so I needed some other way of making a lot of money, and I didn't want to get a job. So I started doing ecom. It was going pretty well. My best month was $100,000, which was okay, but nothing special compared to the potential that it had at that time. Alongside that, I started trading with Alex, who's a longtime friend. We played hockey together, and now he's a partner at our hedge fund. We joined a private Discord group where we started posting signals. At that time, we were trading XRP very aggressively with a very high win rate, with a very high profit per trade, around 800%, and that attracted a lot of attention, until eventually it attracted one of our investors. He's from New York, he's been on Wall Street for 50 years, and he wanted us to create strategies for him and also to automate them. So I talked to many coders, but no one really understood exactly what we wanted to do. So I just thought, okay, we're just going to figure it out ourselves. I started to learn coding, and I wanted to do the entire system by myself. And we did it, but it took much longer and it was much harder than we thought. Me and Alex spent 3 years of 14-hour working days to get to a viable strategy to show to the investor, and that eventually turned into a hedge fund managing over $6 million in assets and $30 million in monthly volume. We managed to get there by building a custom system that builds, thoroughly backtests, validates, live trades, and manages strategies. The biggest edge is we don't just set up and run a strategy, but we do a full analysis and figure out exactly why a strategy works and why it doesn't. Every strategy has times when it doesn't work, by the way. If someone tells you otherwise, they either don't know what they're talking about or they're just straight up lying to you. So we take those strategies, see when they work and when they break, and create a management layer above that, and the management layer defines when the strategy is most likely to be profitable and when not. On top of that, we've created a machine learning model that tells us the real correlation between our strategies. So based on that, we bundle them together, and that way you never trade only one strategy, but rather a bundle of strategies where each strategy trades at its best times. That way, even if one strategy does not work well right now, there are other strategies trading that make up for the first one and then more. The result of that is a very consistent equity curve, a 2,800% profit, and years of proven results. Given that we dedicated the past years of our young adult life to this, we felt like we had some knowledge and learnings to share, so we created the QC trading community. It was there where I found out one thing, that every trader has very similar issues. The market instability is ruining their portfolio, their loss rate exceeded their win rate, they don't have time to sit in front of their computer and watch the markets all day every day, they'd rather spend their time doing something valuable like being with their family rather than spend hours reading news and trying to decipher the markets. They haven't seen more than 3 months of consistent profits, and they had or have a very healthy portfolio but suffered a drawdown because of the market conditions in the past few years, and they want consistent profits month over month, year over year, so they can predict how much they're going to make. To boil it down, they were long-term unprofitable and inconsistent due to the lack of focus and not following strategy, because a human cannot do it 100% of the time. For the ones that were trading with bots, they either have put all their eggs in one basket and just hope that by some miracle the account grows to $1 million, or they were using bots that were not proven on live trading or had a very bad backtest. I'm happy to go over how we validate a strategy before we push it into the dashboards, but it would take hours. That level of attention to detail is needed if you want to build an institution-grade software. The interesting part to me is that all the problems I've just mentioned, the same problems that keep people from consistency, we have fixed years ago. So we decided to build a product. The problem was we were using it ourselves and weren't sure if we could open it up to the public and still get the results that we wanted. Eventually, I personally did a lot of tests and simulations and tested the liquidity with a beta group and came to the conclusion that we can license our software, help more people, and we'll still have the same performance as before. The key part is we didn't just create a miracle strategy that always works, but rather we analyze the markets, create multiple strategies based on core market fundamentals, and then distribute our portfolio across it. Now, what's important for you is that we manage to pack it in a way where this can be fully automated and our members can just connect their exchange to it and have the dashboards live manage their portfolio the same way we manage it ourselves. So basically what you do is you license your own personal hedge fund. And because it is automatically managed, with the risk distributed in negatively correlated bundles, it will outperform any trader over a 6-month period. We saw that internally and externally as well. In general, it makes between 7 and 20% a month and an average yearly growth of 500% because of our compounding management. We always measure performance over at least a 3-month period because that's what matters. You will be alive in 3 months, so you care about the performance in the long term and not the short term. So let's take a look at the individual strategies and stats. Each strategy specializes in something else and works for different reasons. So as an example, let's take a look at the ETH Turtle. This strategy is a trend following strategy based on fundamental principles in the market that if we break out of a range with a certain other confirmations, we are more likely to continue in that trend than not. This principle, by the way, is a basic principle of basically any market, whether that is crypto, forex, the housing market, the rice market in Indonesia, or anything else. This works because of the laws in human psychology and the economics of supply and demand. As you can see, this is one of our most profitable strategies, and in trends, it does really well. Here are the stats. It made over 2200% on the account, has a Sharpe ratio above 3, and has been consistently profitable for over 4 years. This is one of the most profitable strategies that we have. However, in low volatility periods or raging markets, it does not as well. So now let's take a look at, for example, the BTC Bully. This strategy now is a range trading strategy, which means it is based on a fundamental principle that when there is an agreed upon price between buyers and sellers, the price will move around it until one side is exhausted. This means in turn that if you go to the top or bottom of a range with some additional confirmations, the chances are higher that you bounce back than not. Bully, in contrast to the Turtle, is the most consistent strategy in the index. However, if you break out of a range and go to a trend, it does not work as well. So you have the ETH Turtle, a trend following strategy that does well in trends but not as well in ranges, and you have the BTC Bully, which does well in ranges but not as well in trends. As you can see, they are negatively correlated. When you bundle these two together, they help each other out and you unlock a completely new level of consistency, but we don't do this with just 2 strategies, but more. Here's another strategy on Solana. Solana is an altcoin, meaning a smaller, more volatile coin than say Bitcoin or Ethereum. This strategy is a trend following strategy as well. However, in crypto there are main coin season and alt seasons, so when there's a lot of movement in the main coins, the strategy is idle. And the ETH Turtle and BTC Bully do very well. When the money flows into altcoins, we catch those moves with this strategy, and the main coin strategies are idle. This is managed in real time, fully automated. Now the magic happens when we put all of this together. Here is our live account trading the QC index, our bundle with 5 strategies. As you can see, this has been a very consistent upside trending equity curve. While crypto was going up and down with a very high volatility, losing 80 to 90% at some point, in contrast, we have been profiting the entire time. For example, we can look at our trading reports for the past few years and look at a segment in the market where Bitcoin did very poorly and lost about 80% of its value. Here we can see in this range Bitcoin going from its all-time highs at almost $69,000 all the way down to $15,000 where it lost almost 80%. However, the Bitcoin Bully in the same time range made almost 50% profit in that time, where Bitcoin dropped 90%. And the overall equity curve almost doubled from $350,000 to $600,000. During this time, our strategies made almost 100% of profits, where you can see the power of distributed strategies and bundles auto trading in the market. A human being would probably panic or make mistakes in a fast, aggressive, and volatile market, but we have some strategies that are made just for that. My personal and the company goal is that the more people we onboard onto the dashboards, the more data we have and the more people we prevent from blowing their accounts. When you set up the dashboards, which takes 5 to 10 minutes by the way, they will connect to your exchange right away, and whenever the next signal comes, they start trading. You can choose how much you want to trade with and how aggressive you want to go, and based on that, the dashboards will manage the portfolio so you will never blow your account, you will always have the right risk management, without having to look at the trades in the first place. So you'll make automated profits. You can either grow your account or even apply it to one of our prop accounts and spend some time living your life instead of being stuck in front of a computer all day. We have a limited number of spots on our server, so if you're interested into learning more about the QC dashboards and what we do, you can click the link below and see if you qualify for a free call with me personally, where I will go over some more detailed methods we use to achieve consistency, personally give you a trading performance audit, and answer any questions you might have completely for free. Don't let this opportunity go to waste, and I hope to talk to you soon.